those markets are becoming more economic because the price of a lithium-ion battery is falling. So we've talked a lot about the good deflation.
I'm here at PDAC 2016 with Chris Berry, the founder and editor of Disruptive Discoveries Journal. Chris, thanks for joining us.
Thanks for having me.
There's a lot of attention, Chris, about surrounding lithium at the moment. We know you talk a lot about energy metals. What do you make of this interest surrounding lithium?
Well, the price spike in lithium has been, I think, what's caught everybody off guard. We thought that lithium prices would generally slowly trend upwards out over the next couple of years because of supply tightness. Lithium has been really challenged, as has a lot of the other metals with respect to financing for mines. And that's one side of the equation. The other side of the equation is you're seeing demand from vehicle electrification, from consumer devices, and very low, but I think increasing demand from energy storage. And so those markets are becoming more economic because the price of a lithium-ion battery is falling. So we've talked a lot about the good deflation, the good side of deflation. So, we think that the demand for lithium is sustainable, although, that parabolic price spike does make you a little nervous and a little cautious.
Absolutely, and there are risks, involved. What are some of those risks?
Well, I think a focus on just the price of lithium is misplaced. Lithium is an oligopoly. I've talked about this a lot in the past. It's controlled by 3 or 4 major producers, the production is. And so if you're an investor and you're trying to figure out how to play that part of the supply chain, don't focus on the price. What you want to do is focus on their cost of production. And some of that cost of production is due to a new technology, perhaps, or just a great deposit. But, in an oligopoly, if you want to break into that market, you have to meet or beat the lowest cost producer, and so that's the key right now.
You mentioned it's an oligopoly. There's 3 major producers. Is there any way for a small cap investor to play this lithium space without having to invest in one of those 3?
Well, you can look at the juniors. I mean, I think one of the real challenges right now is those major producers. They're not pure plays. Okay, SQM produces other materials. FMC. I mean, they're almost more agricultural chemical companies, and lithium is a nice sweetener. From the junior side of things, I mean, we've been following Western Lithium for an awful long time. Their merger with Lithium Americas, we thought was a really, really wise strategic move. They're geographically diversified, and they're also diversified in terms of the types of deposits they have. And so we think that, despite a lot of the malaise in the mining space overall, we think that an opportunity like Western Lithium is really interesting because it's diversified and sustainable.
And Chris, are there any other companies that have caught your eye these days?
Yeah, when we look at lithium or we look at the energy metals, we want to think about the entire supply chain, not just the mining space per se. And so, one that's really caught our eyes in particular is Nano One Technologies. This is a battery technology company. What they're doing is trying to redesign how a lithium-ion battery is created, and of course, solve those age-old battery problems, basically energy density and storage capacity and things like that. So it's an early stage one, but it's really, really interesting.
And Chris, where can our viewers go to find out more information about Disruptive Discoveries?
Sure. We have a website at discoveryinvesting.com, and basically everything's there, everything that we write in the media and everything. So
wonderful. Thanks again for taking the time for today's interview.
Thank you.
For SmallCapPower, I'm Angela Harmantis.